Today is March 12th, and the Bank of Canada announced that it decreased their overnight lending rate today by 0.25%. What does this mean for you? So, the Bank of Canada has decreased its policy rate to 2.75%. What this means is most lenders are going to decrease their prime lending rate from 5.2 down to 4.95 over the next coming days. This directly affects variable and adjustable rate mortgages, loans, and lines of credit. So if you have a variable rate mortgage or a home equity line of credit, you can expect that your interest rate will decrease by 0.25% over the next few days. Now, if you have a fixed rate, this is not going to affect your fixed rate mortgage. Now, for those of you who are coming up to getting a new mortgage, whether it be a pre-approval, you're renewing, or you're refinancing, if you are considering taking a variable interest rate, I do suggest locking in an approval now. Why? Banks tend to decrease the discount they give off prime interest rate once it goes down. This over the last few months. We used to be able to get you prime minus 1%. Now the best is around prime minus 0.7. So they may decrease that discount even further with lower prime lending rate. If you are considering a fixed rate mortgage, fixed rates are not directly affected by this announcement. They're not coming down 0.25%. Fixed rates tend to follow the bond yields. 3-year bond yields in Canada have decreased since the beginning of the year, just under 0.5%. Some lenders have adjusted their rates to that, some haven't. That really depends on quite a few factors. But it's important to note what the Bank of Canada said today in regards to the trade war. Most economists were saying if this trade war didn't happen, they were not going to decrease rates this time because inflation started to creep back up. The trade war and tariffs, the cost of consumer goods will likely go up, which will drive inflation up further. But the Bank of Canada has to manage the affordability of Canadians as well as not allow us to have too low of interest rates while inflation is high, because that can put us in a tricky situation. So it will be interesting to see how rates will react going further with the everyday changing tariffs and trade war that is happening.